Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand the closing action on the street. It's not looking good. Definitely 260 points lower in trade at 24,144. What this really means is that the Nifty is down for fifth consecutive session in this week. All 5 days we have seen a downtick on the Nifty, and what it also indicates is that the Nifty is now all set to see fourth consecutive weekly loss. Something that it has not seen this entire year so far in 2024. Its longest losing streak, and from the peak we've already seen the Nifty down by about 8%. The mid-caps are now down over 10%. That means that they have entered into a correction zone. Even right now as we speak, the lone sector that's managing to keep itself buoyant in this weak setup is the FMCG sector, but rest all of the sectors have now slipped into the red right now. Let's look at the top losers. Among sectors, we have consumer durables that's down 2.7%. Oil and gas also similar, 2.7% declines, 2.6% fall for the metal stocks, media stocks. PSU banks down 2.5%. At least 6 of the indices are down by over 2%. Both the broader markets, mid and small caps, are down by over 2%. Nifty, Next 50, Nifty Bank, private banks, financial services, IT, pharma, everything seems to be down and out in trade today. The few stocks that are managing to pull themselves up in this week's setup on the Nifty are ITC. It was up over 4% in the morning trading session. It's now up 2%. Axis Bank, Britannia, Hindustan Unilever, Sun Pharma, Kotak Mahindra Bank, TCS, HCL Technologies and Nestle. These are the other counters that are still holding up into the green. Let's look at the top losers. IndusInd Bank, poor earnings, and therefore you see brokerage houses slashing their targets. Over 18% of a cut can be seen on this one. Adani Enterprises, Shriram Finance, BPCL, M&M, Coal India. These are all the stocks that are dragging anywhere between 3 to 5% on the Nifty. Let's now welcome our guest on board to see how is he looking at the sentiment right now. Mr. Amar Singh is now with us on this special edition. He's a Senior Vice President Research at Angel One. Warm welcome to you, sir. Thank you so much for taking the time out. Do tell us, how are you looking at this carnage on the D Street, and should it press the panic button yet? Or is it just going to be another week, another loss is something that we have to see? This is just going as was expected.
Yeah, I would say that, see, somewhere or the other, there were definitely some concerns with regard to valuations. One, I've got a sore throat, so excuse me for that. So valuations, definitely, they were they were to a concern. They were concerned to a certain extent, and also the earnings, quarterly earnings, which have been coming out, they're not, I wouldn't say they are very bad, but yes, they're not matching up to the expectations of investors. And that is rightly so, because there was some sort of slowdown in growth and offtake, which is very quite evident. And markets, the way the markets had run up and the stocks had run up in terms of valuations, in terms of Ps, this was a correction which was waiting to happen. Only the triggers were the quarterly earnings and also the FII selling, which has been very ferocious if you look for this month itself. So clearly those were some of the triggers. Geopolitical tensions, initially there were concerns, but that really hasn't had an impact on the markets, and neither global factors were the reasons for the markets to correct. So having said that, we've seen across the board sell-off, be the large cap, mid cap, small cap, significant corrections we've seen. And the levels to watch out for Nifty, I would say, is 24,000 is very crucial. It's very close to that striking distance within that level, 24,000. If Nifty sustains below the 24,000 level, then we could witness some sharp correction towards 23,500, 23,600 levels, because that's going to be the next major zone of support. If I look at the market from a technical perspective, a short-term trend continues to remain quite bearish. So higher levels are being sold in until the time we don't see Nifty sustaining over the 24,500, 600. On the upside, it could be more of sell-on rallies, and we could witness some increased volatility as well.
Okay. Mr. Singh, would you at all be bullish anywhere in this downturn in this market? Is there any pocket that is actually providing you that comfort of value to in fact take the benefit of this downturn?
I would say that see, most of the sectors we've seen that have had an excellent rally, be it real estate, be it banking, be it auto, be it pharma, be it FMCG, be it IT. So I'll not be saying that sector specific, but yes, looking at stocks in the sectors can be good. So some sectors which can be looked at more closely from the pharma space, definitely, from the two-wheeler auto space, from the, I would say, again, from the FMCG space on any corrections. Apart from that, on the infrastructure space, that is the cement space. So these are few sectors which one can definitely keep a close watch on.
Okay, got it. Let's also look at a few pockets where the pain is now aggravating. Mr. Singh, let's look at, see, the oil and gas space, the metal space, clearly the commodity space, which is now facing the brunt. These are the spaces that have had their chances of benefit during the upward rally. Are they looking attractive? Because has anything changed fundamentally for these commodities? Or do you think one should still stay away because we do not know where the bottom will be found?
So if you look at, first I'll talk about the energy space. So energy
Yeah.
space, we're seeing some sort of correction. If I look at Adani Power, we are seeing some sort of correction there. If you look at Bharat Petroleum, we've seen a significant correction, almost down by 16.5% in this month itself. So that's been a significant. So it clearly tells that Bharat Petroleum seems to have formed a top. If I look at Coal India has also corrected from almost 550 levels to currently around 460. Very crucial levels for Coal India right now. So if the lows of this month, so I would say currently it's around the lows somewhere around 550, 458 or so. So if 450 is breached and sustained, we could witness some sharp correction towards the 430 levels or so. So if we look at some of the other energy spaces like IOC, IOC has already breached a crucial zone of support, which was around 160. So there could be further selling if it sustains below the 150 mark, and then we could witness some further sharp correction towards the 130 levels. Having said that, if I look at one more from the energy space, ONGC. ONGC again approaching very crucial support zone. That's around the 250, 260 zone. Long-term trend is positive, but intermediate term trend really has gone for a toss. So any pullback will be more of a shorting opportunity. Now coming to the other stocks, other sector which you talked about, the metal space. So we look at that as well. So if I look at the metals, what we are seeing is that the party which was on because of the Chinese stimulus and the revival, that seems to be done with right now. And we've seen some sharp correction in Hindustan Copper. If I look at Hindalco has corrected, I would say, roughly around 10% this month, from almost 750 to currently around 680 odd levels. These are again very crucial support zones for Hindalco. If I look at some of the other names like Hindustan Zinc, already has corrected from 800 levels to 500. So this is very crucial support zone. We could witness some consolidation. Above 550, there could be some upside movement there. And talking about another from the metal space, so I look at SAIL. So if I look at SAIL, again, SAIL has corrected from almost 170 levels to around 110 odd levels. Very crucial support zone. So most of the metal stocks are approaching very crucial support zones, post a 30%, 40% correction. And lastly, Tata Steel. So Tata Steel is also approaching a zone of support that's around 135, 140. Currently, it's around 145 odd levels. There we could witness some support and a pullback. But yes, the top definitely has been made for most of the metal stocks. Don't expect them to be broken in a hurry.
Right, so Mr. Singh, let's look at tad bit of winners which are still holding up in this week's setup. Let's talk about ITC, for instance. The way ITC has managed to pull itself up, how are you really looking at the stock after the earnings have come in at the current valuations? Do you think within the FMCG space, perhaps one should be looking at this one right now?
So if you look at ITC definitely is one stock that should be in someone's portfolio. It has, if I look at the stock has corrected. ITC has corrected from almost 528 levels to currently trade around 480. So there has been some correction, but overall it's around crucial support zones. If I look at the stock PE, that's somewhere around 29, 30, so not very high. Sales growth has been around 12-13% over the last 3 years. Profit growth hasn't really been as per expectations. So that's an area where the company could really work more. So this is one stock. On a corrections, one can definitely look at buying, but you need to hold it from a longer term perspective. More in tranches would be a better way for ITC.
Okay, got that. So that's the view that is coming in on ITC as well. Let's also ask you, Amarji, as far as the mid and the small caps are concerned, these are the pockets that have actually borne the maximum brunt in this downturn. Like I began by saying on this show, that the mid caps are now down over 10% from their record high levels. They have entered the correction zone. Remember, a few months ago, we were consistently speaking to you all about whether there is enough froth and which needs to go from these two pockets. Has a large part of that froth already taken out, or do you think there is some more to go in mid and small caps, sir?
So if you look at the mid cap and the small cap, so what we'll do, we'll just have a look at the Nifty mid cap index. So I'll just talk about that, the Nifty mid cap 100. So what we're seeing is we've seen some sharp correction there, almost 8% correction in this month. And there could be some further correction as well if the recent lows are breached. So there could be some further correction and towards the so roughly around 4-5% correction is possible in the mid cap indices.
Okay, got it. So that's the view that's coming in on the mid and the small cap spaces as well. I also wanted to understand from you, Amarji, the pockets that we were erstwhile, they were the erstwhile favorites, pockets within the PSU space, defense, railways, PSU banks. These are the pockets that have actually seen 30%, 40% in many cases, and several stocks even 50% kind of a cut. How are you advising the retail investors whose portfolios were largely bent towards these pockets of PSUs, and within that defense was something that was a large part, railways was something that was a large part, and PSU banks also. Now all of these stocks have been falling like 9 pins. Investors are confused whether they should be using this opportunity of 30, 40, 50% downtick to average out the positions that they have, or should they wait for more correction? Has the thought process on the businesses or the fundamentals changed at all with this kind of a 30, 40, 50% downtick?
So overall, if we look at not only the PSUs, even in private sector, we've seen significant correction in many sectors and many stocks. But talking about PSUs, if we look at first at BEL, Bharat Electronics Limited, so we have to understand a couple of things very clearly. Is that just like trees don't grow to the skies. So markets also, they definitely correct from some time. And if I look at BEL has been a multi-bagger, almost 10x, more than 10x over the last 3 to 4 years. So some sort of correction is possible, because if we go back in time, 2 years back it was trading around 60 rupees, and currently it's around 272 post the sharp correction from almost 340 levels. So we always should look at things from a historical perspective, from a longer term perspective, then we get a better idea. Because the other important point is that the companies, when investors invest in companies, they definitely look at the forward earnings and how the earnings are going to be, and what's the growth trajectory going to be, and how consistent the company is going to be in terms of generating the earnings. So there we've seen some real good progress being made, but currently we are seeing a slowdown. I think that's what is actually, I would say, bringing the reality or realization back to the investors, that it's not going to be every quarter on quarter the same pace. I think that's where the major chunk of selling is coming into. So you can definitely look at these stocks from a longer term perspective. They have corrected. On corrections, like BEL is a good opportunity. If I look at some of the BHEL, again has corrected significantly. Almost, I would say, this month itself is down by almost 20-22%. And from its highs, it's down by almost 35 to 40%. But still, there could be some further room. So it would also depend upon the overall structure of the market and what are the factors which are really going to impact the markets going forward. So there could be a couple of factors. One is rate cut, whether RBI is going for a rate cut or not. That's one thing. The other is US presidential elections, whether it's Trump or Kamala Harris. Trump coming could have more, I would say, headwinds for the markets in terms of statements and all that. So these could be some factors, and in geopolitical tensions that definitely is there, but markets are more or less discounted that until and unless it blows up big.
Okay, got it. So that's the view that's coming in on that front. How about the banking space at large, Amarji? How have you assessed the private banks that have started to show some buoyancy, some support in this market, participation coming in from those which had not participated in the last 3-4 years of the upward run in the markets? Stocks like HDFC Bank, stocks like Axis Bank, ICICI. How are you looking at some such stocks?
So if we look at the banking space, again, banking space, Axis Bank continues to remain positive on the charts. However, we're seeing some sort of consolidation there in terms of, so the range is very clear for Axis Bank. That's between 1100 and 1300. That's a range. So, but any correction is a buying opportunity. If I look at some of the other heavyweights which you talked about, so if I look at HDFC Bank in particular, so HDFC Bank has been holding up. I think that's one interesting thing which we can see is that even today it's hardly down. So and it is holding up quite well. And I would say that HDFC Bank needs to sustain above the. I've spoken earlier also somewhere above the 1800 levels for any major rally. Otherwise, we could witness some consolidation. One good aspect is that HDFC Bank is now very strong on the long-term charts. So initially sustaining above the 1750, 1760 is important. Above, if it sustains above that level, then we could witness some very sharp moves in HDFC Bank. On the downside, it's supported very strongly around the 1600, 1650 level. And the other private sector bank, I would say ICICI Bank continues to remain strong and positive. Again, on any dip, that's a buying opportunity. It is trying to consolidate, but for any significant rally, it will need to sustain above the 1270, 1280 levels.
Okay, so that's as far as the large cap banks. But there is one bank that's actually acted extremely contrary, and that is IndusInd Bank. With the sharp fall of over 18.5%. This is after the earnings and after several brokerage houses have now cut the target prices. Remember, in the morning itself, I had highlighted some of those reports for all our viewers. This was from HSBC and from Citi, where the target prices for the bank had been slashed, and now you can see the stock trading at day's low. Mr. Singh, we have our colleague Asim, who's been looking at the scenario of IndusInd Bank, the brokerage houses, how they have actually come out with these reports too. Asim, 18.5% kind of a downtick. This is much lower than what the brokerage houses were also anticipating. What does it really mean? Are there double downgrades also coming in further going forward from here?
Yes, Sakshi. So the stock is down over 19%, and it has hit a fresh 52-week low today. And IndusInd Bank has been an underperformer in terms of returns when it compared to its peers such as ICICI Bank and HDFC Bank. The earnings have been below estimates. The stock slipped 19.82% to a 52-week low of 1025.30. There are some brokerages which have cut their target prices on the stock, which has led to weak sentiment around the banking stock. SDFC Institutional Equities said that growth deceleration in high-yielding segments, high OPEX intensity with focused efforts on collections and elevated credit costs are likely to keep earnings muted. It has retained its reduced call with a revised target price of rupees 1,245. Another brokerage, Phillip Capital, has maintained its buy rating on IndusInd Bank, but cut its target price to 1,560 from rupees 1,830 earlier. Phillip Capital said stress in the unsecured segment has decelerated the growth, thus impacting margin in the FY25 and increasing credit cost. Another brokerage, Nirmal Bang, has become negative on the stock and has downgraded the stock to hold from the earlier stance of buy and suggested a lower target price of rupees 1,443 from rupees 1,653. However, on the other hand, Motilal Oswal has assigned a buy rating with a target price of rupees 1,500. Motilal Oswal said while the MF and card businesses may continue to report some stress in the near term, overall slippages are likely to remain in control and help maintain broadly stable asset quality. Back to you, Sakshi.
Okay, got it. Amarji, would you look at the charts of IndusInd Bank and tell us, is there further downside ahead after disappointing earnings? While Asim tells us it's a 52-week low, I think this is a multi-year low that we could be looking at on IndusInd Bank.
Yeah, I would say that if you look at IndusInd Bank post its results, which were definitely not enthused, the markets were not enthused by that, and that has led to this sharp correction, and it's down by almost 28% in this month itself. So it is approaching. If I look at the long-term charts, in 2023, the stock had made a low of around 990. So 990,000, that's going to be an immediate zone of support for the stock. But there were clear indications almost from the last 3-4 months that the trend has definitely changed for IndusInd Bank on the long term as well as the intermediate term trend. So it was just trying to hold on to, but that really fizzled out. So that's the level to watch out for. 1,000, 950, 1,000. That's going to be the level where the stock could find some support. Today's low is also going to be something very important because that's close to 990. So I would say one needs to watch out. One should never try to catch a falling knife. Rather wait for some consolidation and then see, because markets generally tend to overreact either for good news or for bad news, and then maybe that could be a buying opportunity as well.
Okay, got it. Well, along with IndusInd Bank, there are several others which are actually down in double digits. Look at a Poonawalla FinCorp from the broader markets, that's down almost 16%. Bliss GVS Pharma is another one that's down by 13%. Surya Uday Small Finance Bank 12.5% lower in trade. You have a recently listed stock, Diffusion Engineers, that's down 10%. The stock had been going up for a fairly long time in the last few weeks. Seen some profits being taken off now. Let's look at some of the other stocks. Soma Textiles 8% down. Johnson Controls Hitachi, after the earnings it's been continuously down in trade. Ajmera Realty is down in trade as well. Glenmark Life Sciences, I pointed out, that's another one that's been sharply lower. And of course, Dixon Technologies 7% lower in trade despite having good sort of earnings, but things seem to be priced in. That's how the broader markets have shaped up. Amarji, 4 minutes to go before we shut shop. The good part is that we are back above 24,200. We've somehow ebbed the fall or stemmed the fall in the markets towards the fag end of the day today. Although it's a sharp fall, but just the last few minutes of buying at the bottom is indicating that there could be somehow a recovery that we could be betting on. Would you say a recovery would be in sight for the next week after this entire week has been a week of sharp sell-off, fourth consecutive weekly loss, and various sectors, things that you pointed out were the key factors. What do you see in the next week for the markets?
Yeah, I would say that these are very crucial support zones. So I think what we are witnessing today is also two things. One is that buying at lower levels, and also short covering is also happening.
Yeah.
Because Nifty's managed to sustain over the 24,000 levels, and it has bounced back quite a bit from the lows of the day. But I would say it's too early to say that we've formed a bottom, because some of the technical indicators from a short-term perspective, they continue to be extremely negative. So what it effectively means is that what we've been witnessing for quite many days now is that any pullback is being met with selling pressure. So we could witness some consolidation. But yes, if today's, for example, if I look at Nifty, so today's high was around 24,400, 450, somewhere around that level. Sustaining of that level, we could witness a sharp rally in Nifty towards the 24,700 odd or so. And again, we could witness some selling pressure there. So 24,000 and 24,600, 700, that's going to be the immediate range. Reaching the 24,000, we could witness a sharp correction.
Okay, got it. So that's the view that's coming in. Well, we will thank you, Amarji, on that note for being with us on this special edition to share with us all those thoughts, ideas, and helping our viewers navigate through this market fall. We hope you have a great time till the time we meet you next, and season's greetings to you for the upcoming festivities.
Thank you and wishing you the same.
Thank you so much. So viewers, we'll start wrapping up the markets now. 187 points down on the Nifty, 24,210. Just slightly better than what we have been seeing. Nifty Bank down 1.3%, but that also was down over 900 points. Remember, it's closing the day with almost 680 points of a loss right there, but below 51,000 for sure. 50,834 on the Nifty Bank. FMCG is nearly up 0%, and that's the one that's been supporting the sentiments, with ITC at the forefront today, and that's taken the leadership role in terms of providing some sentiment breather in the markets. Along with it, Godrej Consumers, United Spirits, Britannia, HUL, Marico, these have been the stocks that were in green in trade today. Even the India Wix, if you look at it, was down by about 7% in the early trade. It's now down by 3.7. It's now up by 3.7%. Pardon me, 14.5 odd levels. Remember, we had gone up almost 7%, and then we are slightly cooling off on that front. On the F&O space, Laurus Labs, Indian Hotels, Torrent Pharma, Godrej Consumers. These are the pockets that were in the winning zone today. On the Nifty, ITC, Axis Bank, BEL, Britannia, HUL. These were the pockets that were shining bright in an otherwise very, very weak market. On the F&O losing front, we had IndusInd Bank, like we pointed out, it ends the day with 19% loss coming in on this one on F&O space. Dixon Technologies ends the day with nearly 8% loss. GM VF, that's Gujarat Narmada Valley Fertilizers, and Bandhan Bank, HPCL also were the other top losers in the markets right now. So there you have it. The screen has frozen at 24,211. Nearly 9 lakh crores is what investors have lost in the sell-off today. It could be tad bit lower because of the last minute pullback in the markets that we have seen, but definitely it's the fourth consecutive weekly loss for the Nifty. We had already lost about 1.8% on the Nifty up until yesterday. That percentage would have gone even further higher in trade today. But let's see, and let's hope that the recovery could be soon now coming in, after we've already seen an 8% downtick on the Nifty from its all-time high levels. With that hope, we wrap up this special edition, but don't go anywhere. Upcoming will be earnings special conversation and with DCB Bank. So stay tuned.
Good morning, ladies and gentlemen. This is our special episode on how quarterly earnings for the second quarter are panning out. And we are joined by the management of Pidilite Industries, one of the finest brands that is there in India over the last 4 decades or so. Mr. Bharat Puri, Managing Director at Pidilite, is with us. Namaste, Mr. Puri. Festive greetings and a very warm welcome to you on Business Today Television. What a fantastic set of numbers you've come up